This is Speak Up. I am Sandra Schulte. Welcome back to our show. I'm very thrilled to have Gene Epstein with us today. He has one of the sharpest minds that I have ever encountered. He's the director of the Soho Forum. He has taught at City College, University of New York, St. John's, and he has worked as a senior economist for the New York Stock Exchange. Today, Gene Epstein is going to explore the question of where is the economy going?
Well, first of all, thank you for that generous introduction. I should clarify that the Soho Forum is a debate society. That's all it does, strictly one-on-one debates. We hold these debates in Lower Manhattan, although they are also live streamed and simulcast so that anybody around the country, indeed I think around the world, can watch them and also vote on the debate resolution before and after. According to Oxford-style voting, you vote yes, no, or undecided on the debate resolution before the debate begins, and then after the debate ends, you vote again. And according to the Oxford-style rules, whoever moves the needle, the vote in his or her favor, technically wins the debate. And we have a fundraising drive because we run into difficulties post-lockdown, many difficulties that I won't bore the listener with. But if you do go into thesohoforum.org and hit the donate button, I would be grateful to you. And it accepts, our donate button accepts both dollars and almost any kind of cryptocurrency. And that, I guess, to some extent gets us into the question that you've asked about where the economy is going. I think that there's a reason to buy cryptocurrency, a reason to buy Bitcoin, even though Bitcoin is highly priced. I'm a little bit worried about gold. The gold price has been flat for the past year, which is a very odd way for the gold price to perform at a time when price inflation has been heating up. And so, with respect to where the economy is going, I guess the primary concern that I have over the next 7, 8, 9 years, I'm looking out that far, is that we're on a trajectory that reminds me of the 1970s. So that was a period that I lived through, and I dare say you remember a little bit about it.
High inflation.
Yes. The 70s brought us to double-digit inflation. Now, we're not there yet. But the circumstances that applied in the 70s are eerily similar to today.
Would you please inform our listeners what you're talking about?
Yeah. Price inflation? Well, as you said, price inflation, because I like to call it price inflation and not just inflation in order to be absolutely clear about what we are talking about. We're talking about the rise in the general price level going up to double digits, 10%, 11%.
Why?
Yeah. Why is that? We have the basic circumstances in place to get on that trajectory, and I list 2 or 3 of them. Number one, we have the sine qua non, the most important fundamental element of price inflation, which is that we've been looking at an explosion in the money supply. I've been posting on my Twitter feed. I should also mention my Twitter account to listeners, because that's where I put out a lot of information. That's where a lot of the follow-up to my columns and to my book is available, although I may be launching a Substack soon. But the Twitter feed that I have, which is Gene at, it's at Gene Soho Forum. My Twitter is at Gene Soho Forum. And there you can find something I've posted a couple of times, which is the chart of what is known as M2. M2 is a measure of the money supply. And it was the preferred money supply measure by my great monetarist Milton Friedman. It not only includes cash and checks, which is M1, it includes all other aspects of what we might call near money, like your savings account. You might have money in a savings account earning these days a very minuscule kind of interest, or it also includes money market funds. So money market funds, savings accounts, that's near money. That's money that we all tap. And so that's the measure that M2 captures, money supply 2, and that's up nearly 40% over the last 2 years. And that nearly 40% on the chart that I release goes back to the 1960s. And it's the highest 24-month increase over the last 50, 60 years.
Why is this frightening?
What's it mean?
Why is this frightening?
Why is it frightening? Well, because the money supply drives price inflation. I think it's something that Milton Friedman said decades ago that amazingly was not clear to the mainstream. But I think it's mainstream economists, I should say. It wasn't clear to the mainstream economists who were very oriented toward the fiscal issues raised by John Maynard Keynes, having to do with deficits and so on. And the mainstream economists have been ignoring the money supply for a long time. The statement is, let me finish the statement and jump in with your question, which is that price inflation, which is always and everywhere a monetary phenomenon. Because if you think about it, if the government doesn't expand the money supply available, if the money supply available is flat, say, then there's no particular reason why people have more money to chase fewer goods. There has to be a government-induced expansion of the money supply, and that's what's happened over the last 2 years. So an expansion of the money supply is essential to the acceleration of a price inflation. And that's the reason why a lot of people prefer gold, why a lot of people prefer Bitcoin. We could get into that. Why wouldn't that happen in a regime in which money is gold or money is Bitcoin? But to get back to your basic question, which is why are the seeds being sown? The first reason, as I say, is the money supply has exploded, and exploded in relation to the past. In the 1970s, it was up about 28%, 29% over the prior 2 years. And that was when we did get a pretty disturbing price inflation in the 1970s. Now it's up 40%. So in that sense, there's even more cause for concern, more cause for, I should even say, somewhat alarm. Now, I think the other aspect of price inflation building up that I think is overlooked even by many of my friends who are free market oriented and many of my monetarist friends is that we're looking at very tight labor markets. We're looking, and that's what happened in the early 1970s, which began the price inflation climb. We're looking at the potential for a wage price spiral. And wages rise, prices rise. And oddly enough, one of the confusions is that on the part of many of my friends who are free marketeers is that they make the point that there's no such thing as a wage price spiral unless you get an expansion in the money supply. That's absolutely correct. A wage price spiral pressures the Federal Reserve into printing more money to accommodate the pressures that come from a tight labor market and then from business responding. And why do I emphasize a tight labor market? Because the most important and ubiquitous price of all is the price of labor, the price that labor charges. And so that was essential to, in my view, to triggering the spiral, the cycle by which price inflation took off in the 1970s. After a while, as people like to point out to me, and rightfully so, the unemployment rate rose in the 70s. It wasn't so tight initially, but once you have that dynamic in place of wages pressuring prices and prices in turn pressuring wages, of Social Security payments indexed to inflation, of union contracts indexed to inflation, of alimony payments indexed to price inflation. All of those pressures build up. And then the next question is, how will the Federal Reserve respond to that pressure? Well, in the 1970s, it gave up. It underwrote that pressure. It kept printing more money in order to accommodate the pressure. And it wasn't until the early 1980s when Paul Volcker, who is now deceased, but who started to hang out with a lot of not a conservatives, a lot of libertarians in his waning days, that he had the courage, I should say, but also courage backed up by Ronald Reagan, to hike the short-term interest rate to a frightening 22%. a 22% interest rate in order to break the back of the inflation, break the back of the expectations that the Federal Reserve would continue to accommodate the pressures. That 22% interest rate completely decimated interest-sensitive industries, in particular the housing industry, other industries that depend on a lot of credit, and that caused a major depression at the time, and that began the process of disinflation. Now, where are we headed in terms of whether we'll get a Paul Volcker? I don't anticipate that for a long time. I think that Fed Chairman Powell is afraid to raise the interest rate above the rate of inflation. There will probably, we have effectively an interest rate of 0%. He's going to raise it a little bit, but an interest rate that's below the rate of inflation is absurd, because who in his right mind in a free market would lend or borrow money at a rate of interest rates that's below the rate of inflation? That's a negative interest rate. And there's also pressure on Powell, the Federal Reserve Chairman, to maintain a low interest rate because the U.S. government is now so deeply in debt, it doesn't want to pay high interest rates for its debt. And so there's pressure as well in order to accommodate the inflation, keep interest rates low, and hope against hope, which is what Powell and the other Federal Reserve people have been doing, hope that the inflation does not continue. But that's basically my spiel. Perhaps you want to comment or ask a question about it.
Well, you were mentioning Bitcoin.
Yeah.
How will Bitcoin play into this?
Well, I think that there is a potential future for Bitcoin, and as an alternative money, and I think that perception that it could be money. I mean, I don't think it really is quite money at the moment, even though famously when Bitcoin was first put out, there was a pizza pie transaction that was arranged for Bitcoin. That somebody bought some pizzas with Bitcoin, and of course those turned out to be some of the most expensive, by far the most expensive pizza pies ever bought, because it was bought like by 1 or 2 Bitcoin, and Bitcoin, as you know, is currently worth in thousands of dollars. But so therefore it was expensive, but it turned out just to show that Bitcoin could be used as money. Bitcoin is being used as money in El Salvador. It's beginning to be used as money, which I, by the way, define as something basic, which is that money is strictly speaking nothing more or less than a medium of exchange.
It's what people accept as a medium of exchange.
Yeah, what people will accept as a medium of exchange. Yeah, and right now, just to revert to my little pitch about charity, about philanthropy, the Reason Foundation runs the Seoul Forum. We have no legal existence. The Reason Foundation accepts donations on our behalf and puts them in a special account for us. The Reason Foundation will accept Bitcoin as a donation. It will accept other cryptocurrencies as a donation, and to some degree, it does get Bitcoin as a donation. Now, it does convert that Bitcoin into dollars. That's true, but at least it is using that as a medium of exchange. So we do know, to get back and to focus on your Bitcoin question, we do know that Bitcoin year over year has risen in price quite steadily. I say year over year, that's one 12-month period to the next, and because it's very volatile in the short run. It goes up and down in the short run. So what I had been doing is buying $1,000 of Bitcoin every month, one of those dollar cost averaging, so that whatever the price of Bitcoin is, if it's lower, you buy more of it, if it's higher, you buy less of it, and because you want to diversify over time. And now, obviously, I'm not saying to people, put all your money in Bitcoin, but I certainly don't have all my money in Bitcoin. Most of it is still in the stock market. But I'm also buying real estate through pretty well diversified real estate investment trusts. In other words, if you and I were in the real estate business, we'd know what real estate to buy, but we're obviously amateurs. And so a fairly diversified real estate investment trust that buys different kinds of real estate would probably be the best bet. As inflation hedges, I've jumped ahead because you asked me about Bitcoin. And I said, well, Bitcoin is probably a good inflation hedge for an investor with a portion of your portfolio. And now I've jumped to real estate as another advisable hedge for a portion of your portfolio, given the threat of price inflation over the next several years.
What role do you see Bitcoin playing in banking in the large, the marketplace in the large?
I don't think that the powers that be really like Bitcoin, and I think that the banking system. I regard most bankers as banksters. And I use that term, to sort of have a ring with the term gangsters, because while some bankers are really just honest people, so many of them are in thrall to the government. So many of them really owe their allegiance to the government, and the government is at this point not really interested in a stable currency for us. The basic purpose, presumably, of the government, if it is going to run the money supply, is to keep it stable. Make sure that price inflation doesn't occur, and now look what happened. They did it to us in the 1970s, and then they punished us with a recession, and a major recession, and now they're doing it to us again because they're deeply in debt, and they obviously want to. When they expand the money supply, it means that the Federal Reserve buys its debt. The Federal Reserve needs to keep the interest rates low. So therefore, I think that they will try to co-opt Bitcoin, but given the habits of Bitcoin holders, I don't think they'll succeed. So my further depressing scenario is that for Bitcoin to begin to become money more than it is now, that is a usable medium of exchange, it will, of course, continue to grow in price. And the very fact that the Bitcoin float is going to be worth more and more, I think, is going to make the price more stable over the long run. When there's more of a float, more
supply.
Of a float. What? I'm sorry?
Are you talking about supply?
Well,
What
the
float?
supply part of it is really a twofold issue. The supply of Bitcoin, as you probably know, by decree, because it's got a locked box, can never be more than 21 million units. And that blew my mind a little bit. But it was, of course, a very important innovation to be brought about by that gentleman, Satoshi. Maybe he was Jewish, maybe he was Japanese, maybe he never really existed. He invented it, and the point about making it stable at 21 million units was to make sure that nobody could tamper with it. Nobody would have the temptation, if they issued their own private currency, to expand the money supply beyond a certain limit. Because, again, if money is brought out privately, let's say I bring out Epstein's. I go into the business of bringing out a currency called Epstein's. And I say, well, you can use it. It's much better than the dollar. Well, don't I have a temptation to expand the number of Epsteins? Because if they're money, I can just print money and get rich in the process. If you trust me, do you trust my descendants? Do you trust the other people who take over the business? It becomes a problem to trust anybody's private money. That was the reason why gold was trusted. Because even in the height of the gold finds historically, it was almost impossible to expand the gold money supply by more than 1% or so, because all the gold that ever existed is still outstanding. So that too was the reason why gold became money, because it was inherently stable. Other reasons too for gold, but that was an inherent aspect of it. So Bitcoin is stable at 21 million units. But what I meant in terms of supply is that if Bitcoin is going to be worth $10,000 per coin, or $50,000, or $60,000, or $100,000, or $1 million per Bitcoin, then that means the supply increases in terms of the way it's valued in dollars. That means that the supply increases in that sense, and the float increases in size. And that means then if at the extreme, let's say Bitcoin's worth $1 million a unit. So if somebody buys $1 million worth of Bitcoin, then his ability to cause volatility is very limited, much more limited than if Bitcoin is worth $60,000 a unit. So in that sense, the supply will increase in terms of the value of the float. But where we are headed would be a circumstance in which the dollar has to become unstable. And it will become unstable because of price inflation. It could become unstable in terms of other currencies as well. It could become unstable because the U.S. debt is out of control. Those would be the circumstances in which I think Bitcoin would begin to become a more popular medium of exchange. And I'm not predicting it will happen, but I'm happy that Bitcoin is around, and I'm happy that given the upsetting circumstances that I've listed, this is not something I happily talk about. I'm 77 years old. I don't want this for my kids. I don't want to bequeath this kind of world to people. I don't want to be around when I'm 97 and have to see it happen. But the silver lining is that Bitcoin could solve the problem. Now, I've been emphasizing Bitcoin, and I haven't been talking about gold. And of course, there are a lot of respectable people who still think that gold could still become the medium of exchange. I'm just now. Two things are true about gold. The gold price at about 1900 an ounce is still way out of proportion to how you would value gold against its industrial and ornamental uses. Gold does have industrial and ornamental uses, of course, still. So it has value in that sense. But very, very unlikely that you would value it at 1900 if that was all there is to it. It's being valued at 1900 because it still has that premium of being perceived of as a monetary metal, not just an ornamental and industrial metal. So there is still a little bit of life in gold in that sense. But it does concern me that here we have got a real disturbing heat up of price inflation over the last 12 months of 6.8%. What's it? Debt, all kinds of things to be disturbed about, and yet gold is flat. Gold is actually the December close was actually like 3% down from the December close of the year before. I know gold just has not responded. Most of the gold bugs I've spoken to, the gold bulls, I shouldn't call them bugs, it's not nice to call them that, the gold bulls, the gold enthusiasts, over the years that when gold was fluctuating and pretty flat, used as their excuse the fact that officially recorded price inflation was only crawling along at around 2%. So that they basically implied, well, wait till price inflation heats up, then you'll see gold do something. Well, price inflation did heat up, and we're not seeing gold do very much at all, if anything, even though it's maintaining its premium, so to speak.
Because they didn't have the alternative that they have now.
Yes, well, that's right. You put your finger on at least one potential explanation for why gold is not doing what it did in the 80s, in the 70s. In particular, it really took off in price. It went up to 800 an ounce from an initial price of 35 in the 70s. It may well be that all of the monetary hedging against price inflation and against the dollar and against the debt is taking place in the crypto space. And I'm favoring Bitcoin because there's a huge debate between the enthusiasts of Bitcoin and the enthusiasts of all of the other cryptocurrencies. The Bitcoin people call the other cryptocurrencies coin. I hope your viewers don't mind a little vulgarity.
You're talking about labeling.
Well, labeling. So there's been a lot of debates already on the internet that have been released about the debaters between the Bitcoin enthusiasts and those who advocate for alternative cryptocurrencies. I've been persuaded, although I'm not an expert, that probably Bitcoin is still the best cryptocurrency. I digress that way, but in answer to your question, again, it's not just that there's been a lot of investment in Bitcoin that might have taken away a potential investment from gold, but also there's been an explosion of other cryptocurrencies that's also probably hurt the gold price.
There was. What was a famous person
I'm sorry?
Who died, and he didn't leave the key. The key is a big question mark in the investment in
Well,
Bitcoin.
as a matter of fact, you're talking about the difficulties and complications of owning Bitcoin, and there are services that give it, that make it simpler to own Bitcoin. Although I think that they have a problem. I think that the services like I forget, but I'm forgetting the names at the moment for the companies, even though they're pretty well known. That basically sort of make it user friendly for you. But one thing that they don't do, that where people like you and me really need our hands held, is that you can't get anybody on the phone. You can't get anybody to walk you through it, explain it to you. You read something, you didn't quite understand it, or you don't have time to read up at all. To guide you through it. I really do think that there's an entrepreneurial opportunity. And there's Swan Bitcoin, for example. That's one alternative. Now, Swan, they don't have people you can get on the phone. They don't have guides. And I do think that there's a real potential, an entrepreneurial potential, to organize a Bitcoin service where you don't have to worry about your key and losing your key to your Bitcoin and all the rest of it, where they hold it for you, they in a custodial account, and they guide you through. Yeah.
Gene, what are the main points that you'd like our listeners to take away with them?
When I'm looking at the economy going forward, I'm concerned about price inflation. And I do think that those of my listeners who have sizable portfolios, and to everybody, I guess your portfolio is sizable no matter what the size, to look at the potential to orient your portfolio more toward inflation hedging vehicles, in particular real estate investment trusts, Bitcoin, maybe gold, maybe silver, but at least call up your broker, call up advisors, read up. What are those assets that respond well when price inflation heats up? That's the major takeaway.
Tell them again exactly how they can get a hold of your Soho Forum or even see the debates on your Soho Forum.
Well, we're having a debate on February 17th, and if you go into I'll do the www dot, but you don't have to put that in, thesohoforum.org. T-H-E-S-O-H-O, Soho, forum, F-O-R-U-M, thesohoforum.org. I almost was unable to spell the name of my own organization, thesohoforum.org. And then you'll see all of our debates listed. We're having one in February, one in April, and one in February, March, and April, and one in May as well, all scheduled right now. We're selling a package to people, and in particular, for those people who are concerned about the vax mandate and don't want to come to the physical venue, we are offering another special deal. If you come to my loft apartment, you have to pay a fee. On my 123-inch screen, there will be a simulcast. And this is what we did at our last debate, a simulcast of the debate. It's only 2 blocks away from our venue where we're running the physical debate, my loft apartment, and then there's a reception afterward. So there are options then for people who don't like the vax mandate. thesohoforum.org.
Thank you so much, Gene. Terrifically informative. Until the next time, this is Speak Up. I am Sandra Schulte. Goodbye.